What's good, ladies and gentlemen? Today, I just want to cover an aspect of traps. Now, the idea of a trap in the charts is something that you can project a trap because that's the environment that we're in right now. But traps are always being created by the market maker. And I wanted to give you an example of one that happened. So Odin last night asked this question. Currently building M building. Level 1 drop is due. In my opinion, that's why one more hit to get the 29k liquidity will straight back down into Asia tonight. He projected this correctly. Okay, now you can see he's working off his phone. But we go down and we go into this discussion right here. So here's my response, bringing light to what the gentleman was saying. This is the situation. We assume that the 29 zone is going to get hit due to the liquidations in that area. You are correct with your logic that this could be forming an M formation. But remember, we need to see the rejection from Bitcoin. So factor in that your M formation might not be finished, or it might finish differently. This sometimes happens where the second leg of the M is higher than the first, so the more time they spend not going higher, the more we lean towards the idea that Bitcoin is going to roll over. Unemployment claims might just do that. We look at the image, and there it is right there. What am I trying to help you guys understand? This is what you're looking for, okay? The faster that price moves away from a zone, the more likely they're going to reverse back down, okay? Now, hear me out with this one. We can profile that Bitcoin at this point and at this point showed interest. So the first thing when you come to the chart after a big move up or a big move down is to determine where is the aggression, okay? Where are they grabbing retail traders' interests, okay? So we go over into the high block. We can go over to the liquidation levels, and we can then assume by this utility here that in this area, because that's the area that we're talking about, you see this zone right here? This is where liquidity is coming in, all right? These green dots are people going long. Price reverses. So when you start seeing this behavior, you have to have some vigilance in the chart, all right? Notice that this big move up here, they haven't really taken many of the liquidations from that. They moved away from it. In this zone, when you're trying to work out if they're going to go to a vector zone or a liquidation point, looking at this will aid you in understanding if there's going to be a sequence of movement to try and grab more interest from traders. Funnily enough, when we zoom into this area here, we see that that cluster of buys right there leads to imbalances, that there's interest, market maker is running shorts from that zone. He then does it again over here, cluster interest, people going long. He's trapping traders, not going for the liquidations. He does it again up here, happy days. He then brings it back down. Now, go back into the bigger time frame of this. Stick with me on this. We go into this whole area here. Now we see one zone, two zones. We look right and you can see that they've come back up. So they've copied the same process. If they are not going down, then it gives us the idea that they could be preparing to move up. Likewise, if they're not moving up, they could be preparing to move down. But this chart gives you the insight that traders are trying to go long and they're fearing that Bitcoin's going to miss out, or they're going to miss out on a move by Bitcoin. These are the traps. Notice the biggest concentration of orders being opened is at the highest point of the move. These are the traps, okay? Now, you can exploit a movement from 28,628 all the way down to 28,420, okay? You can grab $300-$400 moves in Bitcoin. Even look at this. Move from that point, 28,554, drops all the way down to 28,000 and 299. These are high leverage scalps that you can exploit. By what? By finding the point that they trap from, okay? So last night we had premeditated ourselves. We were on the idea that they were going to trap again because the profile of Market Maker was suggesting that there's interest in here. Now we look at it as green and blue vector candles, okay? You go into the liquidations chart, you can see that there is commitment in there. So you've got the first bout of liquidity here that is suggesting to you that there's interest. We then go over to exo charts, and then we go in and assume, okay, then what's the story over there? And we have the volume profile itself, and we're paying attention to specific zones. We look at the open, and you can see that they come away from that open. So if I bring up Bitcoin right here, we look at the daily open, okay? They marked price all the way down to 28,093. So what was down there? At the open, price was near the value area low because it all resets on the new daily candle. So all of these numbers are close together, okay? Or these values, right? Open, value area high, VWAP, and of course, point of control. What they had done was they had marked price down lower after in this area here. They came down towards that zone, which was the 28 right here. So 28,088. So they were hunting for value. So 28,088 takes us towards this area here. We were approaching a key area of support because the contract started to taper off in this area. There was not that much interest. So you would be naturally expecting reversals when the value area low is so extended down because they've been trying to get interest from traders and say, okay, you happy to buy from here? You happy to sell from here? And this led aggressive sellers to come in. And we had all these imbalances in the chart, okay? Now, when we go back into the movement of Bitcoin all the way up towards that key zone, what was that zone? We've got the 29,186. We go and have a look at that area in the chart. So 29,186 takes us into what is called, of course, the value area high. And that's where we end up at. And that happens to be the point in the chart that they reverse from, okay? Now, this is the situation here. So I was speaking about this vector candle point for them to come back up. And then, of course, this green vector candle run up where they started off from the daily open. Well, quite frankly, they didn't do that first. But the logic is still the same. You've got 28,237. So 28,237 takes us down towards this area right here. So the value area low at the time of day finalized here. Again, the principle's the same. They were in the value area low where they were finding interest by traders, where we expect traders or interest to come in and reverse from the value area low. Because remember, it's an area of support and the value area high is an area of resistance, okay? We've got the volume profile and the depth of market. Cool. What if you didn't have that? What could you have taken from this? How were we of the understanding that Bitcoin was going to do this? Did I use the depth of market to understand that? Well, quite frankly, the depth of market is something that you use in real time, okay? You can't gauge the idea off the depth of market and say, right, I expect price. Well, where's price right now? Well, price is right here, okay? I expect it to try and take the point of control again because that is where the interest is most contracts are transacted from, okay? Then I've got 1,200 right here. So at any instance, if they move down towards this area, the point of control could change because it could go to 1.4 or 1.5. Now I've got a change in the point of control, okay? So I'm not looking for Bitcoin to come all the way back down towards this area here to test it, okay? Although the vector candle strategy suggests to me that I've got a wick here that I anticipate Bitcoin to try and visit, okay? What's at the daily open? Well, I go into the daily open and I say to myself, okay, what's going down there? The daily open is down at a point where they reversed from. So naturally, as a market maker, I know I can get orders filled inside of this area. There's liquidity there. So naturally, I'm going to anticipate price going towards that zone. You run a short from there, fine. You take the game. You play the short. You go short from this area, ride price down towards the daily open. When would you get out? Well, you have a red vector candle region up here. That's the risk you take. That, ladies and gentlemen, is the risk you take. Because how many times do you see a red vector candle region, they don't recover it first? And then they end up coming back to it later on. This is the critical thing about price action with the hybrid system. You are looking for bold moves. That's all you're looking for. When you get yourself in these situations here, you are increasing the odds of confluences needing to come into play. So you're hunting for confluences. This has to match up, the VWAP has to match up, or the vectors have to match up. You're looking at the chart. There ain't nothing going on right now. Your criteria has not been met. Now go back into last night. You were anticipating that they were going to try and do something in Asia because they were moving up from the New York session and they were holding out in here. So how could you have effectively anticipated this move to play out? The only thing you can do, ladies and gentlemen, is take the trade. That's all you can do. So let's look at the confluences in this area. What have we got? We've got stopping volume candles coming into play. Something's brewing. Something's changing. Okay? I know market makers been busy in this area. We've got one significant push, two significant pushes. I'm going to expect a third push. I've got liquidity up here that I know Mr. Market Maker could try and take in the Asian session. The only thing that's left for me to do is take the trade. Where's my exit? Well, my exit's going to be below this structure right here because there seems to be a very interesting point of commitment by Mr. Market Maker inside of these zones. Okay? So I go into the chart and I say to myself, well, what actually happened? Well, price wasn't breaking down from the 200 EMA. You can clearly see that right there. There was no test of the 200 EMA. Okay? Now, this was the point that they come up to from here. Okay? So this point here is this point here. Right? They came down. So they marked back down to this area. The 200 EMA was pointing upwards still. You'd be going long from here and setting your stop loss below this structure. Okay? Did the structure get taken? No. What if Bitcoin was decided to go down? Ladies and gentlemen, you just don't know. Like we didn't know it was going to do that, but based off the information we had, it showed that Market Maker was showing an interest in this zone. This is where you come to the understanding of finding a trap. If you are working on trying to exploit a trap, we have to be in the setup where we can assume a trap is pending. The market was giving us that structure. Spike 1, drop. Spike 2. How many times has Bitcoin done this? We've been here before. We're just at a different price. Now, I'm going to say it and be straight up with you guys. In the channel, I'm always talking about news, talking about specific price points in Bitcoin. I don't care about price. I really don't. But you guys are here because there is an understanding about the hybrid system. You guys are clocking onto something. How many times have we been in this scenario with Bitcoin? It's like I'm on Groundhog Day. I'm looking at the same shit all the time. This is on the 5-minute time frame. I'm going to go back as far as I can to see if I've got the same situation. Here is exactly the same situation here, okay? Looking for traps, all right? What instance have we got here? Look at this. Push 1. Push 2. Price is coming up in this area here, but you don't get that much of a push. All right? When was that? Monday, the 27th of March. All right? They hadn't shown the same interest that they did before. Okay? Look at the vector candles. Huge imbalances happening here. All right? They were doing all of this above the key 27th or 28,000 zone. All right? But prior to that, we didn't have that many short liquidations at 29. There was more liquidity down below, okay? Now, what's the difference between this and then this structure right here? You've got exactly the same thing. Look what happened here. Stopping volume candles. But you've got more commitment here and here and here, which is saying to you, right, they're not going lower. All right, look left. What have we got here? Well, we've just come from a very big move to the upside. Mr. Market Maker can grab interest because everyone's going long on Bitcoin. So I'm going to hold out in this area. This is the thinking process you want to put in your minds when you are looking at the charts. Fuck the confluences. Forget it. Because it's a mind game. You are trying to work out who's buying and who's selling. The confluences that come together are going to aid you in the psychology of what you think is going to happen. We go back to this and we can see what's the psychology. Work it out. What does the psychology suggest inside of this zone? They had every opportunity to break down the fast move that happened here. Why did it not continue lower? Because they stopped it with the blue vector. The blue vector is the clue that they weren't done with this zone. They moved aggressively away from it. Look at the stopping volume candles. Spike lower, grab the liquidity, bring it back. Spike lower, grab the liquidity, bring it back. What's going on here? Retail is fighting to go short. Okay? That's why Market Maker triggers their orders lower. They go short. He brings it back up and makes them pay the price. He did exactly the same again here. Spike lower, back up. Spike lower, back up. All these gray stuff candles here is noise. That's retail. But what's the difference between this sort of play here and then this sort of play over here? How could we not know that this was going to happen? You don't. But just look at the play. What's the difference between these zones? I don't see strong vector candles pushing lower here. Holding out from this zone. All I see is red vector candles grabbing liquidity, okay? Bringing it back up, bringing it back down. Bringing it back up, back down. Back up, back down. Look at this. The third hit. What's the difference between this third hit and this area right here? Psychology. What's going on here? What can you see happening twice? Can you see it? Let me zoom out. What can you see happening? Is there a particular strategy that you're seeing unfolding here? Because you don't see it over here. Look carefully at the lows. Do you see it? Okay. 1, 2, 3. Zoom in. What do you see? You see stopping volume candles, yeah? Stopping volume candles, cool. Stopping volume candles. They come back into the red vectors. This is Market Maker grabbing liquidity, bringing it back up. Not that much interest by Market Maker. In other words, it's not that he's trying to stop it from going lower. He's not finished with the zone just yet. He marks it all the way up, back up again towards that 28 zone. Whole and half number principle. Okay? Now, the question that I was asking you, what do you see happening? Do you see it? Now, the same zone in front of you. What do you see? You see candlestick patterns. Red candle, blue candle, red candle, green candle, red candle, blue candle. These are the clues. MM was getting ready for the flavor. Okay? But hold on a second, Tino. How would you understand that looking at this? I already sensed it with that. Because that was a strong hold of the move down here. We expect the recovery of that blue vector. And then they didn't go lower from that point, suggesting that there was support from market makers in this zone. When you see them take a red vector candle lower and then volume instantaneously comes back up and you've got a huge deviation away from the moving average, it's a trap. So we are of the understanding that we're in trapping environments now. Cool. Go back into the chart. Price goes back up. It comes back down again. Oh, you see another green vector candle coming in. This time, what's the volume like? It's near enough matched Look at the volume down below here. It's near enough exactly the same right here. Look at that. Near enough the same. Okay? They're going higher each time. You go long in this area. You should not have any problems running longs in this area because unless they break below the structure of the 200 EMA in this instance, you are good with your long. You get your money in good because they're not breaking below this zone. Okay? Then, of course, volume disappears. Then you get the first blue vector candle coming in the volume, and then they shift out. They then repeat the same process here, and the same process here. Let's go and find another one. Okay, so we've got this structure. All right, cool. Let's go find another situation. We could use this. Okay, here we go. Same scenario. We see Bitcoin moving up now, don't we? All right. Now, I'm talking in hindsight, and you're probably thinking, yeah, it's fucking bullshit, Tino. No, it's not bullshit. You know why? Because you've just seen two ways, okay, how they play the chart. I'm trying to get you to think of the psychology of the price movement. Think of the way traders are thinking. That's what it's about. Because this candlestick will not exist if no one is buying or selling. So what are your confluences really? Are they indicators or is it human nature? Because people are greedy here and people are fearful. Why is it? It's always going to be the switch to it. When they're greedy, you go, you have no fear, okay? Have no fear when they are greedy. Be greedy when they are fearful. That's what it's about. You always hear about the transition of wealth. We are going into a reset. Look, we are resetting every single day because things go up in value and they also drop in value. Think of the psychology of price before you think of the movement of an indicator giving you a signal it's going to happen. Oh, Tina, there's a blue vector candle at the 50 EMA, blah, blah. Fuck that. You don't, I'm not saying you don't need it. You need an awareness that something is being triggered because we are in essence trading the unknown. You are trading what you can't see, for the better word. That's what you're doing. You're trading what you can't see. You are trading what hasn't happened. This is how you evolve as a trader of the hybrid. People are getting caught up in the idea that they need to understand the hybrid system to understand it completely. No, you need to understand that price action is only based on the commitment of people agreeing that one zone is favorable against the next. But we are working with sinister forces. Mr. Market Maker, he gives us the idea that price is going up and then we're going long, going to the liquidations, and you see bright as day. Look, man, these guys are getting screwed each and every time. Now, if you try and work a strategy around that sort of concept, then happy days. Looking for interest from traders. Look for the commitment. Who's Moon Boy and who's in the pits of hell? Unfortunate story right there. Look at this guy. These guys went short on this point. Always. This is a critical indicator because it tells you the psychology of where traders' heads are at. Going short at the lowest point. You see a red dot appearing, bang, you're getting ready to run your longs. Because that's what the story is. Just look at this structure right here. How long did it take for the market, or this trader right here, how long did it take him to realize that he needed to open a short? Well, let's just break this down, okay? Here's the psychology. Oh, Bitcoin's dropping. Nah, it might come back up, but I'll just leave it a bit. Ooh, going up, okay. Well, it's actually going back down again. Once it breaks this area here, I'm going to try and see if I can take advantage of a short from this zone. Here we go. So it's come back down. It hasn't broken it. Bang, it's moved back up. Right. I'm going to wait, man, because I knew I'm glad I didn't open a trade short here because I would have been shaken out. Yeah, baby. Okay, cool. Oh, look, it's starting to roll over. Right. It's starting to get busy now. They're going to come back down towards this point. Right. Once it breaks it, I'm going to go short. Bang. Wicked. They broke it. Awesome. I'm a fucking great trader, man. I've gone short from that zone. Back up. Oh, okay. Yeah, bit of a drawdown. I'm cool with that. No worries. My liquidation zone is all the way up here at 28,000. It goes down again. Yeah, man, I'm a fucking awesome trader. I'm the shit right now. I've got it. I know what I'm doing. I ain't going to lose no money. You know exactly what happens. $26 million worth of shorts opened, okay? $24 million worth of shorts opened. $24 million worth of shorts liquidated. $26 million worth of shorts liquidated. $30 million worth of shorts liquidated. In that area right there, we actually look at Bitcoin. That time frame was March the 29th at 9:30 at night. March the 29th. That'll take us towards this area right here. You as a hybrid system trader would have been fully aware of what's going on in that zone. Go down to the 1 minute time frame. It's right here. Here we go. This area. You as the hybrid system trader have got the edge. Mr. Market Maker's done his business. Zone 1. Okay? Yeah, I don't believe it. Hasn't broken the moving average. Okay, cool. Bang. It's broken it. Cool. Let's wait for it. Retrace. Bang. It's come back down. Awesome. I'm going short from the lowest point. Now, don't get it twisted. You guys are following this pattern. You guys are going short from here. Yeah? Retail's going short from here when you have completed your pattern. You're out. Okay? Look. What could you see on the 1 minute time frame that was suggesting it was going to change? Stopping volume candle. Okay? The whole point of the marketplace is to understand who's buying, who's selling, who's getting trapped. Let's take this for example. What have we got here? Price is going up. Let's go to our high block liquidations. Let's have a look. Have we got any interest from people coming in? Nope. Don't have any entries. No one's getting excited about price. So what does that mean? That means market maker needs to get price exciting. We have a look at this point up here and we suggest, okay, maybe they could actually mark price up towards this point. But we've got news announcements coming up later on. Now, I'm looking for Bitcoin to come back down towards this wick. I want to see the daily open on Bitcoin. So what's market maker going to try and do? Is he building shorts above this key notable area? Is he getting ready to roll over the 28,500? Let's do the same breakdown again. Let's look. What do we have? Spike up, vectors aren't finishing clearly. Spike up, fully recovering the 50% of the red vector zone, but leaving a little bit more in sight. So we have to be cautious of that, okay? Now we've got all this cluster of vector candles inside of here, and it's holding out very well. We go into the actual order book and we say, okay, come on then. What have you got for me, Bitcoin? Where you at? You're at a very important point right now. You are currently trading at the point of control. So as a trader, there seems to be an agreement right now. Do I do anything? No. Because you haven't had no movement. You haven't had no trap set. Traders are waiting for the news announcements to come out. There's nothing for you to do. But Tina, what if I miss out an opportunity to go long or short and, I've missed the move? Cool. You've missed the move. Okay. Explain this to me. Have you missed the move? Always remember that when they move price aggressively from one zone to the next, like this bad boy right here and here, you're getting ready for the opposite direction. How long it takes is the $100 million question, ladies and gentlemen. Blue vector candle seems to always be the time that they like to decide to turn and trade. Notice how the volume right here was going down. At the highest point, it was at its lowest. Going into the 1 minute time frame, you can see bright as day what they did. Now, what I'm talking about right now, ladies and gentlemen, it applies to everything. Stopping volume candle. Retail's getting involved in here. First red vector candle that breaks the 50 EMA. Bang, there's your break right there. You're trading into one zone. You're trading to the next. 1 minute strategy. Happy days. 5 minute strategy. 1 minute. Okay? Focus on the price movement. Ask yourself the question, would you go long when price is all the way up there? Because it's showing you that retail is. Okay? Now, you might say to me, yeah, but Tino, what if he just keeps on going up? I may have been able to say, you might be able to say the same shit that you said right here, okay? But look what it did. It kept on going up. Look at the chart. Do you actually think that there is a lot more commitment in traders coming in? Market maker is probing. He's testing the interest. No one's going short. Out of all of these longs that came in here, we've got 2 short positions that were opened. Psychologically, what do you think market maker's doing? He's looking at this saying, yeah, man, we can get some liquidity. We can actually grab as many longs as possible or shorts as possible in this move. Everyone's buying. Binance News ain't bothering people. They're not interested. Bitcoin is going to be the savior of the finance world. Yeah! I don't give a fuck about price, ladies and gentlemen, and that's the brutal truth. I don't care about price. I have no interest in Bitcoin being 100K, 2K, 8K, 8K, 9K, 3K. As a trader, I'm only interested in what it does near whole and half numbers. I attach no value to Bitcoin. A fundamentalist will. A Bitcoin enthusiast will. A Bitcoin maximalist will. A miner will. But a trader has no business focusing on what he thinks Bitcoin's value should be. Bitcoin's value is only going to be what someone is prepared to buy and sell. And you, as a trader, are looking to exploit the relationship between when one guy says, I believe Bitcoin should go away from this point and trade higher, against the retail trader who's in the belief that Bitcoin should trade away from this zone and go lower. Take away the idea of worrying about whether an indicator is going to give you the buy signal or the sell signal. The indicator is right in front of you. Who is buying, who is selling, and who is doing more of it? Market maker marks price to the upside. He's trapping the shorts. He's trapping the longs. He gets the commitment. We got the commitment there with the high block. Happy days. Got quite a few clever motherfuckers right here, haven't we? Short, 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 short. Who's going short from there? I believe it's guys who trade the hybrid system are going short from there. That's what I believe. Please forgive my profanities in here, but I get a little bit passionate. It might be a hard practice for you, ladies and gentlemen. But the only way that you can really understand how to exploit this, when you look at price psychologically, it's when you see something odd happening. That is odd. Get ready. Look, you could wait for a move all week for this. You've missed out on a big move on Bitcoin. Okay, cool. You've missed out on it. Fine. But then you see this big move right here and you're like, oh my God, this is a climatic move. Bang, they take a drop to the downside. You going short from there with whatever amount of leverage, and you go high leverage and put loads of margin up. You have made yourself an absolute killing from the top all the way down to the low. That's $1,000 move in Bitcoin, ladies and gentlemen. That is huge for a Bitcoin scalp. You look at this move to the upside and you say to yourself, I didn't miss out on shit, man. I had the patience to wait, okay? Because psychologically there was something brewing here. You might be thinking, well, what about this move up and this move up, Tino? You'll be seeing this move here and saying to yourself, right, okay, I've missed out on that. Cool. I've missed out on that. Cool. Right. I've got another move up. I've missed out on that also. I'm waiting now. They're consolidating more than what they did over here. Now I've got eyes on the chart. And if you don't trade all day and you don't have an opportunity to take advantage of a play like this, cool. Then you see the climatic move. Now you've got your window to go short. Bang. Because psychologically, everyone is all pumped about this move. That's the best trap. Because all the guys who play range trades have all had their orders triggered. Market maker showed that with his continuous probing of this zone and this zone. Because traders are drawing boxes against each of the candlesticks and they're setting orders right here. So that you can see they probably do this. Bang, they got triggered. Yeah, baby, we made the money. Bang, we're back into the zone. Shit. I hope that makes sense, ladies and gentlemen. Mad love and respect. Peace.